Today's topic is parametric insurance in agriculture, and we have an expert to talk about it. Hello, everybody. Good to be with you once again. We are very lucky to have with us Sid Jha, who's a financial expert. He's the CEO of a company that does parametric insurance. Let's hear from him. Over to you, Sid.
Thank you, Subodh, for having me here. It's a pleasure. I want to talk about parametric insurance and parametric financial products today. I am the CEO of Arbol. We started in 2018 and have grown across geographies and industries since then, offering financial products to mitigate climate risk. The industries vary from agriculture to energy to insurance, reinsurance itself. While today I will focus specifically on the applications to agriculture. The goal is to close the climate coverage gap. So you have 200 billion plus of climate-related losses annually, and it is estimated that $1 trillion of crop value has no insurance. To close that gap, we need new solutions. The traditional way insurance is adjusted, which is to send a subjective loss assessment person like an adjuster to figure out the damage after a storm or after a season, is not really practical in most places in the world and is very prone to delays, disputes, and fraud. To close that gap, we need parametric solutions, and many countries like India and others have been experimenting with this in larger and larger scale. With the advent of satellite data, with the advent of better weather data and crop yield data, we now have the chance to broaden that adoption of much more efficient products which pay based on an external objective data set rather than a subjective human loss assessment. And that, in a nutshell, is what parametric refers to.
Yeah, so you have a system rather than an individual who goes out and looks at it. You have a way of having parameters which you can monitor from a distance, right?
Right. And as data gets more granular and available, the basis risk between the data being measured versus the farmers or agribusinesses outcome is reduced, that difference.
Right.
We also don't just work with farmers. In fact, we work quite a bit with agribusinesses, and they're really a very ignored part of the market.
Okay.
Right. So agribusinesses take an input and process it into an output, or they transport farm inputs. A lot of these guys need the crop to hold up. They need a local crop production to be good, but they don't get subsidies if the crop fails, right?
Yeah.
So they are exposed to climate risk in the chain as well as much as growers are often.
Sure.
So our products cater to many of these different types of agricultural businesses across the chain, large and small. So the goal, with parametric coverage is to start taking these climate risks and taking them to other capital providers who want that risk.
Yeah.
You can't think of the external product to the client side. You have to also make it appealing to the capital side. And so diversification is key for that, right? The financial industry is very much looking for uncorrelated risks that can provide alpha. These risks, whether it is on rainfall, whether it is on crop yield or temperature, do not have links to the Federal Reserve or interest rate cycles or geopolitics. So it becomes attractive from an alpha standpoint. So what we try to do is bridge that gap through technology in creating these financial products that are appealing both to the client as well as to the capital providers. And that's the promise of parametric insurance in agriculture. We have, like I said, a huge gap to fill. We have a lot of exposed entities that goes well beyond just farmers. And of course, they're very important as well in this process. And as we build new products through the use of technology, through the use of better data sets, and through the use of extensive artificial intelligence algorithms to price these risks, that's where we link clients and capital with technology.
So what sort of data do you need for this? algorithms? Where is the data coming from?
Yeah, a lot of the data is publicly available, right? Because you want data to be trusted by both parties. That's
Okay.
often large public data sets, which can be augmented with higher resolution private data sets, assuming both parties agree.
Yeah.
The real edge comes in taking this raw data, building the right products that might be tailored to a particular region or tailored to a particular crop cycle, and then pricing that risk, not just on a standalone basis, but in conjunction with all the other risks we are having in our portfolio. And
Okay.
we transact across other markets too. So for example, we may have a lot of wind speed risk for wind farms. Low wind is a problem for wind farms. Or we may have heat wave risk for the utility sector in energy. They
Yeah.
have big links to that. By combining these different climate risks in a single portfolio, you now start to get the benefits of diversification rather than a parametric insurance program just focused on one area.
Okay.
And this was where some of the early parametric firms focused on was, okay, I'm just going to do it in this part of the world or this
Right.
type of. The
Yeah.
issue with that tends to be is it lacks diversification.
Yeah. Okay. So I think, the theory is good, obviously, but could you give some examples that where you have actually been able to, you are not the insurance company, so you are selling your product to insurance companies, I take it.
It's actually complicated. What we bring is a full service solution. So we
Okay.
have data networks, we have structuring, pricing, and we have capital pools in our ecosystem for which we underwrite and manage the risk.
Okay.
So
So
we
you are
are
actually, yeah.
data risk managers.
So you are actually underwriting the risks.
Yes, and
Okay.
we have actually varying capital pools,
Okay.
both from the alternative capital world and the
Yeah.
reinsurance world, which
Okay.
have different risk parameters and other things. So that was another big thing that we realized early on.
Yeah.
If you're just taking your product and selling it to insurance companies, that is a very difficult process, very long process to get them to change the way they do things.
Okay.
So we went ahead and built that whole chain ourselves to create these new products.
Okay, wonderful. So is there some practical example that you can give so that more people can understand what you actually do?
Yeah, sure. So one example is an industry we work with extensively is the cotton industry in the US here. So when you have a cotton gin, they need cotton inputs to produce yarn on the output. They will source their cotton from say 6 or 7 districts in a particular area.
Right.
We have a full platform that can allow them to put different weights on different districts based on their sourcing. And the weighted basket of the local regional cotton yield is used to determine the insurance payout. So
Okay.
if it's a bad crop year for cotton in that local area,
Yeah.
note that, this is why the futures markets don't work in this case, right? If your local area has a problem, that doesn't mean the futures market will go up. That moves on global balances. That moves on Chinese economy, lots of other things. So here we can ensure the local footprint. And there's actually a blog post about one such gin saying how we saved their year, basically, through this insurance payout. So that's an example of parametric insurance for agriculture. And it's a more unique example because it's not just to a grower, it's to a processor.
Okay.
We work with growers. We actually have platforms that do rainfall insurance, for example, across large areas, agricultural areas. And, we're looking at moving into the Indian crop parametric space as well next year.
Okay, wonderful. So it's still something that's getting out into the mainstream. It's innovative and it started, but it's not yet everywhere. Or is it everywhere?
We do transact globally, but we are just scratching the surface.
Okay, yeah.
We have gone from a couple million in gross premium in 2020 to this year being on the order of $500 million.
Yeah.
And we're still scratching the surface. There are so many industries, so many arenas that are affected by this risk.
Yeah.
Another example is construction. Construction weather delays are a huge problem in the industry and something we'll be tackling soon as well. So, our client base, our geographic base, which is now New Zealand all the way to West Coast US, continues to grow rapidly. But there are huge swaths of the market where, these products could be applicable.
Okay. So I think from the perspective of Vega MX, let me just ask you a question which you may or may not choose to answer. What would be, say, the benefits to poor farmers, and would they have to pay for anything, or how would they how would they get the benefits of this?
Yeah, generally speaking, it's in emerging markets, the budgetary constraints are strong, obviously. And so you wouldn't just necessarily expect the farmers to pay. Often it will be some sort of government program for which you are providing services. Or on our case, we may instead choose to provide reinsurance support to the local insurance companies who have the local distribution. Okay. There are a number of ways to go around it, but generally speaking, it will not be the small farmer who will be asking to pay that premium, because they wouldn't be able to necessarily afford this directly.
Right.
Now, the other issue is the agribusiness sector. Like if you're a palm oil importer,
right,
you have exposure to the palm crop in Malaysia and Indonesia.
Right.
And there's even a local climate risk.
Yeah.
So agribusinesses have more of an ability to pay directly.
Yeah.
But there you need to tailor the product well to their needs.
Okay. All right. Yeah. So, I mean, the people with money, they are the ones who will buy the insurance, right? I'm just wondering whether any benefit trickles down to those who are in the bottom of the supply chain of agriculture.
Absolutely. So the thing is that once you can start offloading risk, you can offer insurance to a lot more farmers. So even if, imagine a local insurance company in India, right? The more risk it can offload to entities like us internationally, the more policies it can write locally.
Okay.
Right? If they can't offlay the climate risk, then they will stop writing policies much sooner.
All right.
Parametric insurance doesn't necessarily have to be at the local level. It can be at the reinsurance level, but it still becomes a scalable way to grow a market. And if you want to get more farmers to have this kind of insurance, you need risk transfer mechanisms that allow the locals to write more coverage.
Fine. I get the point that, insurance markets are very tiny, fragmented, not developed at all. And if you are coming in with reinsurance, that's a big relief and can help the local market expand.
And reinsurance is one way to kind of make that happen. If we target agribusiness as clients, it's like, let's say there's a processor of soybeans, right? And he's making soybean oil. If they can have more security in what they're doing, or a sugar mill, then that also means that they'll be around to purchase the inputs in more years to come. I mean, in India, processors have had big boom and bust cycles based on the crop, sugar mills, for example. Obviously, there's other issues there with regards to price intervention. But one is that risk is borne by them to a massive degree on the crop.
True. Yeah.
You just basically make the whole system a lot more robust by having at least the option to transfer out these risks.
Yeah. Okay. I get the point. Okay. It's clear that, if you are the seller, then you need a seller who is secure, right? Because that's the only way you can get a good price and consistent price or short sell, because the seller itself must not go out of business or be hurt by cycles. Okay, fine. Anything else you want to add here? I mean, you have explained it very well, but in case you have anything else you want to add, I'm happy to hear it.
No, this is what I had in mind, and I hope this is helpful for the listeners.
Okay, great. Thank you so much. So, Sid, thank you on behalf of Vega for coming here and explaining what you have done. And let's say bye to the viewers. Okay, so we stop the recording. Okay, bye everybody. We'll be back
Thank
with
you.
another expert or another young person at some point, but for the moment, bye.